Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, Jupiter Lifeline Hospitals is the next management on the show. It reported what was a good set of Q4 numbers. It saw improved occupancies and average revenue per occupied bed in the fiscal as well. To discuss more of this, we have Dr. Ankit Thakker, who's the CEO of Jupiter Lifeline Hospitals, joining in. Ankit, hi, welcome to the show and congratulations on what's been a good quarter for you all. If you could just break up what the occupancies and the average revenue per occupied bed was for all three of your hospitals, Pune, Thane as well as Indore. Okay, I think you're on mute, Ankit, if you can just request you. Yeah, go ahead.
Do we now, Ekta?
Yeah.
Okay, so the occupancy for this year has been about 64% on a blended level. Thane is at 72, Pune around 62, and Indore for the whole year was 52%. And the ARPOBs have been in the range of 55,000 on a group level.
All right. So Indore 52, Thane 62, and the other one you said was 72%.
72 Thane, Pune 62, and 52.
Pune 62 and 52 for Indore. What about the mix of high-end surgeries in the quarter? And you did speak about the average revenue per occupied bed on a consolidated basis. You want to break it down for all these individual facilities?
Sure. So Thane is around 61,000, Pune around 54, and Indore around 41.
And what was the mix of high-end surgeries this quarter?
So we don't really track high-end and low-end surgeries in that sense. We are focused on, comprehensive care. All our hospitals are hub units, so we don't really make a distinction on primary, secondary, tertiary. We just do all facilities in each hospital.
Your consolidated average revenue per occupied bed was what, 55,000 rupees you mentioned?
Yes.
Okay, that's quite a lot for a hospital which is focused on micro markets as well. So give us a sense in terms of what you're probably, going to increase your ARPOBs to, and how much of it is probably going to be pushed by insurance coming in as a payment method for you.
So Ekta, when you say micro market, what it essentially means is that we are located in very dense residential areas. And we choose those locations where there are a lot of local residents in, tier 1 urban cities, but they don't have a good healthcare facility within a 30-minute driving distance. So there is nothing that in terms of healthcare that we would not do. We go right up to heart transplants and liver transplants and cancer and all of it. So we have a full suite of services in each of our hospitals. ARPOB, I think going forward, we are quite satisfied with the ARPOB numbers the way they stand. And we believe that Thane and Pune should only see inflation-linked growth in ARPOB going forward. Indore, however, is a relatively newer facility. There might be an additional lever of, improved case mixes, more complex surgeries, etc., which is a natural course in the first 3 to 5 years. So that is an additional lever for Indore, otherwise inflation.
All right, another lever for Indore, because it's a new hospital, will always be increased occupancy along with increased ARPOB as well. So what are you factoring in terms of, an overall improvement in occupancy and ARPOB in FY25? And you have a couple of facilities coming on board as well that starts from FY26, I presume.
That's right. So in Indore, occupancy would definitely be a lever for overall performance. This year, we had an exit occupancy nearing 60%. We think this is a good time to, think about capacity enhancement. So we have secured permission to build 2 additional floors in Indore, and we would be adding about 75 new beds in Indore. Pune also with 62%, I think, is a good time. We have a possibility to add 22 new suite rooms. We are going to do that in both these activities in the current financial year. Besides this, you asked about the new hospital. So the Dombivli Hospital, which is already under construction, is progressing as per expectations. It is likely to commence in Q4 of 26. And besides this, we have a second location in Pune, which we have just signed. and we will be building a new 500-bed hospital in Pune as well. So that is about the new facilities.
So, Ankit, I just want to touch on this point with regards to the Supreme Court ruling on the possibility of standardization of rates or linking it to CGHS. Are you a part of any kind of health body which has moved the Supreme Court, and what might be the progress? What is the industry saying on this, and your view on whether it could possibly even be implemented?
Sure. So because it is still pending before the Supreme Court, I think my view is not appropriate to air. However, the facts of the matter I would be happy to share. In one of the hearings, the Supreme Court had requested the central government to do a consultation with the states and get their view, because health being a state subject. And the union government did in the previous hearing, in fact, come back to the Honorable Court and present their minutes of their discussion. And most of the states have not clearly voted for this initiative. They have acknowledged that different qualities cannot be at the same price point. They have acknowledged a lot of complexities in carrying out this exercise, and that has been placed before the Honorable Supreme Court. However, the final verdict is still out, so we'll wait and see which way it goes.
Okay. And for you in particular, Ankit, your payer mix indicates that you get revenue and correct me if I'm mistaken, you get revenue from government schemes, which is absolutely minimal, I think at around 1.2%.
Right.
So if in case there is any kind of alignment to CGHS rates, how would it impact your business? Would there be a complete cut in rates which you would have to undertake in order to align yourself?
Yeah, I mean, if there are new rules of the game which will get applicable to all providers in the country, then, everyone will have to realign their business models. Currently, I think it is a little far-fetched and hypothetical situation. So eventually, the way the court directs, I think we will all have to adapt and comply.
But how far away are you from those CGHS rates?
I think all private hospitals, the private patients, the insurance and cash are significantly higher than CGHS rates for the corporate hospitals, all the listed ones, which you would be seeing. So there is a definite delta between the CGHS and the privately charged patients.
And just before we let you go quickly, what's your balance sheet looking like? Can it support inorganic plans, or you are satisfied with the organic growth targets that you have?
So definitely our balance sheet is now completely deleveraged. We are fully debt-free post-IPO. So we have free cash available as a result of that. And also, like you said, if there was a good opportunity where we thought that we had to lever and take on something, we are absolutely capable of doing that. Having said that, the current thought process is to keep going the organic way. Along the path, if we do find some interesting opportunity, the balance sheet will support.
Okay. All right, Ankit. It's been a pleasure talking to you. Thanks very much for joining in and speaking with us and giving us all of that perspective. Well, that's the view coming in from Jupiter Lifeline Hospitals. That stock is up around 5% post Q4 numbers. We'll take a break. Richard Jain will join in next with some trading ideas. Stay tuned.